Imagine your finance team managing thousands of invoices every month, each tied to a different VAT rule, customer, and approval flow. Yet, they're still expected to deliver all of this with 100% accuracy and real-time e-invoicing compliance. For years, this control depended on PDFs and manual checks. But starting September 2026, France is going live with B2B e-invoicing, which would mean that every invoice is validated, transmitted, and automatically sent to the tax authority. So this isn't just a regulatory update. It's a structural change on how the cash flows and how the compliance interacts with your organization. In this video, we'll walk you through what you need to prepare so you can protect your working capital, avoid penalties, and turn compliance into efficiency. France's e-invoicing journey began with B2G transactions, business to government transactions. Since January 1st, 2020, e-invoicing for the B2G transactions was made mandatory, and the platform that enabled this is called as Chorus Pro. Now, France is moving from B2G to B2B invoicing, and this rollout will be happening in phases. Starting September 1st, 2026, regardless of the size of the companies, all the companies should be able to receive e-invoices. And on the same date, large and medium-sized enterprises should issue all of their e-invoices and transmit all of this data to the tax authority either through the public invoicing portal or the partner dematerialization platform, PDP. Then, from September 1st, 2027, small enterprises will join in, and this will complete the national rollout, making e-invoices mandatory for every company regardless of size. The company size is determined by three factors. One is the number of employees, the second one is the annual turnover of the company, and the third one is the total balance sheet value as of 1st January 2025. So whether a business is determined to be large, medium, or small, it totally comes down criteria do they meet. So this phase structure allows the larger organizations that handle complex e-invoicing process to go first. So while the smaller businesses have ample amount of time to test their integration before their go live. So here's the takeaway for CFOs. The budget and system planning needs to start now. Integration and testing will roughly take around 6 to 12 months. France's reform introduces two complementary obligations. One is e-invoicing and the other is e-reporting, each serving a different purpose in the country's new digital tax reform. First is e-invoicing. E-invoicing needs to be carried out by any domestic B2B transaction that happens. All the e-invoices that are being exchanged by the France-established companies need to go through certified platforms like PDPs, which stands for Partner Dematerialization Platform, or PPF, Public Invoicing Portal. So this ensures a structured e-invoice will flow between the supplier and the buyer in real time. This is designed to eliminate the manual reporting, reduce the errors, and speed up the validation and the payment cycles. Now, the second process is e-reporting, which would happen for cross-border B2B transaction and B2C transactions. For transactions involving the non-French entities or the end customers, businesses must only transmit the summary of the data fields and not the full invoice. This would keep the sensitive customer and the product details protected under the GDPR, while still allowing the tax office to monitor the VAT flow and the cross-border trade. So what does all of this mean for the CFOs and the finance teams? So for multi-entity groups, this would mean coordinating between two different workflows. And it's clear that your PDP should be able to automatically distinguish between two of these cases, while ensuring the right data format, reporting frequency, and routing every single time. This would result in a unified system where the domestic as well as the cross-border trade would run in sync. This would give the finance team more visibility without compromising the operational efficiency and the data privacy. The France's e-invoicing reform follows a Y model, and it's through this Y model that invoices are sent from the supplier and received to the tax authority and the buyer. We start with the supplier. The supplier creates the invoice in their ERP or the billing system. In France, the invoice must be in a structured format like Facture X, UBL, or CII. So if their ERP cannot produce these formats, an OD converts the invoice into the correct structure. Or they can use their chosen PDP, which stands for Partner Dematerialization Platform. So over here, the supplier's ERP sends the structured invoice to their chosen PDP. The PDP checks the content, validates the data, and converts it into E-Invoice and prepares it for delivery. Now the E-Invoice needs to reach the buyer's PDP. So here's where the why model begins. The supplier's PDP sends the e-invoice directly to the buyer's PDP, and the routing is done through the national directory called the Annuaire lookup. So it tells the supplier's PDP exactly which PDP is responsible for the buyer. So while one branch goes to the buyer through their PDP, the other branch goes to the government platform. So on the buyer's side, the buyer's PDP would receive the e-invoice, and then they would send it straight into the buyer's ERP or the accounting system. So over here, the buyer can process, reconcile, and archive it automatically. At the same time, the supplier's PDP sends the required invoice data and the status information to PPF, which is the government portal and stands for Public Invoicing Portal. So this is the second branch of the wire. It lets the DGFIP collect the VAT data without controlling the exchange itself. So in practice, every French e-invoice takes two parts at once, one to your customer and the other to the tax authority. If all of this sounds very complicated, don't worry. We have put together a France e-invoicing booklet that will teach you everything from scratch. This reform isn't small, because it covers 4 million businesses and billions of invoices are made every year. Getting this wrong can result in penalties. But it's clearly not just about avoiding the fines, because it also unlocks on operational efficiency. They also provide other benefits, which would roughly result in 4.5 billion euros annually, is faster payments and fewer disputes, easier VAT compliance, and reduced fraud. It results in richer data for the policy decisions. Done right, this will give you real-time understanding of the customer payment behavior, which is an insight that every CFO can use. France's e-invoicing reform is more than just avoiding penalties, clearly about modernizing how invoicing works, using e-invoicing and the e-reporting. With Complyance, your ERP will connect to France's PPF and the other EU countries using just one API. Our platform automates the mapping and the validation, so your team can focus on their core business rather than manual paperwork. So it's clear that you will be able to get ahead of the 2026 deadline, because by the time everyone else starts preparing, you'll be operating in real time.